We are watching Walmart this morning and its answer to Amazon Prime. It is Walmart Plus rolling out today for $12.95 a month. Shoppers can get same-day delivery on a minimum $35 order, which includes groceries. Joining me right now is the former president and CEO of Walmart, WSS Venture Holdings president, and KKR senior advisor, Bill Simon. Bill, great to have you. Thank you so much for joining us.
Good morning, Maria. How are you?
This new program for Walmart fits right into what we've been seeing in terms of those industries and customers that can actually adapt to this changing environment. Tell us the significance of what Walmart is doing as you see it.
Walmart has long coveted a subscription service to go head to head with Amazon. And they've tried 3 or 4 times. This one's different. This one allows grocery and combines grocery and their GM strength, which is really trying to recreate the supercenter online through a subscription service. If they can use their food, the frequency of their food business to also help sell their general merchandise line, they can mix it out better and hopefully get to profitability more quickly.
Yeah, I mean, since this pandemic started, we've been seeing the winners and the losers within retail. And if you didn't have a delivery strategy, if you didn't have an opportunity to adapt to a shutdown, you were in big trouble. It's sad to see some of these long-time retailers actually closing doors. What are your expectations of the impact on retail? How is this going to play out? We're going to get August retail sales tomorrow. We're expecting 1.5%. But as fall rolls around, holiday shopping expectations are uncertain. What's your take?
Well, retail has actually been, better than I think most people had expected. It's not been even. I think that there have been categories and retailers who struggled, but by and large, it's held up pretty well. I think the pandemic accelerated digital e-commerce development probably by 5 to 10 years. And if you were not up to speed on that or got up to speed very quickly, you'll be behind. As we head into the fall, it's been really interesting to see typically Black Friday, Cyber Monday, that weekend has been really critical to the selling season. And, if you missed that, it was been very difficult to have a good holiday selling season. With the delayed openings now and Thanksgiving not on the line, it leads me to think that the focus is going to be online and there won't be as many in-person Black Friday deals, and it's going to be difficult for them to make up all that volume online. And so the holiday selling season, I think, is going to be a bit uncertain as we get into that direction.
Yeah, it's interesting that you believe this shutdown pandemic has actually accelerated the digital economy by up to 5 to 10 years. I know it's accelerated it, but that's pretty significant, 5 to 10 years. How do you invest today? Tell us where the growth is in retail.
Yeah, 5 to 10 years, and I'm really speaking from the consumer perspective. It accelerated adaptation. I think people had to head in that direction. I think that's likely where retail is going to head, and it's going to still be a mix. I think the vast majority of retail will remain brick and mortar, but e-commerce will take a larger role in the facilitation, buy online, pick up in store. The omni-channel retail experience, I think customers are now completely blending the two of those. So I think that's likely where it will head. It's also been really a change from an investment standpoint, Maria. And this has really been more of the Amazon effect than anything I can think of. And that, 5 years ago, it used to be grow your profit faster than your sales and your share price would move forward. Now, if you're not growing digital sales at a hyperactive rate, it's really hard to get a good valuation on your company. And we see retailers, and Walmart's a great example. They've invested a ton of money and almost a third of their operating income they've given up in order to build an e-commerce business, and yet investors have rewarded them by buying their stock. It's in the near historic highs. So there's been a change fundamentally from an investment standpoint as well.
Target is pledging more diversity within its workforce, promising to increase the number of black employees by 20% over the next 3 years. Reaction there? What are the main issues in your view today, aside from the digital economy, for retail?
Well, I mean, with respect to Target, Brian Cornell's done a terrific job there since he got to the company, and I really think he stepped into a difficult role. They were stuck in an experiment gone bad in Canada, and he got them out of that and headed them in the right direction. Their moves in diversity, I think, are in the right direction. You really have to have a workforce that balances the population if you want to have the best talent and serve your customers well. So I think that that's the right move for them, particularly, they're a Minneapolis-based company, and with all the issues that have been going on there this summer, I think it's a good move for them.
Look, we know that consumer spending is 2/3 of economic growth. So let me get your take, Bill, before you go on the backdrop. Are you expecting a comeback in this economy in 2020? What's your take on where we stand in terms of the economic recovery?
I've been surprised, I think many people have, Maria, at the resilience of the consumer through all this. I think that as long as we continue to see jobs come back, hopefully the two sides in Washington will come to some agreement on another, stimulus bill to help people who are still struggling. But I wouldn't have bet that unemployment would have been, in the 8% range at this stage. So I think we're ahead of where we thought we would be. Retail is ahead of where I thought it would be, which indicates to me that the consumer's going to remain pretty strong.
All right, we will leave it there. Bill, it's great to talk with you this morning. Thanks so much for your insights.
Thanks, Maria.